All right, welcome you all to our management accounting session for 2025. So we had a little family meeting on Tuesday, and I highlighted to you guys how I'm going to be assisting you during this semester. I showed you guys a timetable of the dates when we will be doing the KCQs, when we will be doing the case study assignments, and then I highlighted that later on in the month of May, at the beginning of May, late April, we will be doing exam revision, and I'll send the timetable for that exam revision when we start to do exam revision. However, I highlighted that from today up until we start on the exam revision that we are going to do, I will be sending through videos for some of the materials or study materials that you are doing just to help you to study in the meanwhile while you are attending the Mancosa lectures. So some of those videos will be live like what we are doing today, but most of them will be offline recordings that I will be sending to the groups. Right. So I'd like to thank all of you that reached out to me, that is on Tuesday and also yesterday and today. I believe I've added almost all of those that reached out, I've added them to the paid groups. And if you have not yet reached out to me and you want assistance with your year two, make sure that you reach out to me so that I can add you to the year two groups where you will get access to the recordings, where you get access to the notes of what we will be doing as we go throughout the semester. And reminder, the cost is 600, not 800, it's 600 Rand for each module. And you can also pay in installments. And then if there's anything that is confusing you, feel free to give me a call, feel free to send me a WhatsApp. I will explain it to you in person. So what we want to do today is we want to introduce three different modules. We want to introduce management accounting, we want to introduce cost and management accounting, and we want to introduce costing. So cost and management accounting is done by those that do Bcom accounting. Then costing is done by those that do Bcom financial management. Then the rest of you guys do what is called management accounting. So these are three modules, but they have so many similarities. Hence, I'm going to introduce them, all of them at the same time, because they are all talking about the same thing. They are putting you in the position of a manager at the workplace. Now, we all did financial accounting in our first year, right? Where we did financial reporting analysis, we introduced you to what accounting was all about, right? So when we introduced you to what accounting was all about, we highlighted that there is a difference between what is called management accounting and what is called financial accounting. There's a difference between management accounting and financial accounting. And we said that when we are dealing with financial accounting, we are dealing with the measurement, record keeping, and presentation of financial information within an organization. So that was what financial accounting or financial reporting was all about, right? But now when we are dealing with management accounting, we are saying that we no longer look at how do you report the accounting information, but we look at how do you utilize the accounting information in order for you to make a decision. Now, one of the key concepts of management accounting is what is called cost accounting. That is why some of you actually just do a module called cost accounting, and some of you do a module called management and cost accounting, because cost accounting is a significant component of management accounting. So it has a separate definition, etc. We are going to do that in a separate video for those that do those specific modules, right? But in essence, when we're looking at management accounting, you are taking financial information and you are analyzing that financial information, and then you interpret it and communicate it to the internal users of information in an organization. So, for example, you can take the information regarding the expenses of the organization for you to make a decision on whether to continue using a specific supplier or not. You can take financial information regarding the amount of inventory in an organization in order to make a decision in terms of how much stock or inventory should we order at a specific point in time. You can take financial information regarding the expenses of a particular project in order for you to decide which of these projects should we conduct as an organization, which is investment appraisal. So there are different useful ways that financial information can be to you as a manager when you are making the different decisions that you're going to be making. But for you to be able to make these decisions, you need to understand how to analyze, interpret, and communicate this financial information. And that is what management accounting is all about. That is what we are going to be learning, because it's going to be useful in order for us to plan the different things that we need to plan in organization, i.e. maybe you're making financing decisions or dividend decisions or decisions regarding control, how to manage maybe escalating costs that are making your organization unprofitable at the end of the day, right? So when we did our financial accounting, or when we did financial reporting, we stipulated this. I'm sure you guys remember this slide when we said that there are differences between the two, and we highlighted those key differences. As a student of both these modules, you just need to know these differences. It's not like they're very, very key or very, very important at a later stage, but you just need to know what these key differences are. So when it's financial accounting, which you did in your first year, you're looking at external users, right? People that do not belong in the organization. But when it is management accounting, you're looking at internal users. You're looking at your managers, you're looking at your employees, you're looking maybe even at the owner of the company as an internal user of information within the organization. Right. Then when you're looking at financial accounting, usually these are standardized reports that are produced in standardized times. So for example, you've got your balance sheet, your financial position, you've got your income statement, you've got your equity statement of equity, changes in equity, right, which you produce every year, maybe 28 or 29 February. So it's standardized. But when you're doing with management accounting, it's not standardized. There are so many varieties and so many reports. Some of the reports, I remember when I was working in the bank, the reports that we did when we were working in the bank, and the reports that we did when I was working in an insurance company, and the reports that we did when I was working in an investment company, they were completely different. But all of them were still called management reports or management accounts at the end of the day. But they were completely different because there is no standardized way of doing management accounting. We just give you tips. You can do this, you can do this. You then take those tips and present them in a way that matches the organization that you're operating in. So because of that, you notice that with financial accounting, because it is standardized, there are rules and regulations, i.e. the accounting standards, right? But with management accounting, there are no rules, there are no regulations. It's whatever the organization has agreed on at the end of the day. And consequently, financial accounting focuses on the past, and management accounting focuses on the future in terms of how can we improve our organization at the end of the day, right? So that is the key concept of what we are trying to learn when we are looking at management accounting and when we're looking at financial accounting. Now, there are limitations to management accounting because of what we said, where we said that there are no key rules when you're dealing with management accounting. So because of that, it gives you certain limitations in terms of the information that you're using, because anyone can interpret that information differently. It is not an exact science, right? It does not solve all of your problems. It is not an exact science. Therefore, it has certain limitations that it gives you as a what? As a participant of management accounting, right? Then the last thing in terms of introduction is I wanted to define something here. Just give me a second. Do I have the definition here? I wanted to give you the definition of cost accounting also, in addition to management accounting. Just give me a second. Because it is a useful definition to know as a student. Okay, let's see. Cost accounting. So for those of you that are doing, remember I said we've got 3 classes. For those of you that are doing cost accounting and those that are doing cost and management accounting, we are going to have separate lessons. I just combined you today because it's an introduction, more or less everything is the same. But when you're dealing with cost accounting, right, which like I said, it's a branch of management accounting. It's part of management accounting. But when it's cost accounting, it's whereby we are trying to compile all of the information relating to the costs of producing a particular product. So when you are manufacturing or when you're doing the process of manufacturing within an organization, there are certain costs, whether they are direct costs or indirect costs, whether they are materials, labor, electricity, whatnot, that are related to the product that you're manufacturing. So when you compile those costs together to aid the management in terms of decision making, that is what is called cost accounting, which is a branch of management accounting at the end of the day. And whenever we are doing cost accounting, there is what we call the cost accounting circle. And the cost accounting circle, which is important for all of you, including the students that do management accounting, because that's the next unit. The next unit deals with the classification of costs. Right. So within the cost accounting circle is you want to record the cost data, right? You want to understand what are the costs that the organization is facing. I have produced a laptop. What were the costs for me to produce the laptop? Then you highlight that for me to produce this laptop, I had to get some plastic. I had to get some chips. I had to get some metal. I had to get a battery. I had to get a camera. I had to get etc. So you record the different costs that you face as an organization. Then once you record those costs, you classify the costs, which is what we're going to talk about in about 2 minutes time. You classify the costs according to there are different ways that you can classify the costs. We're going to go deeper into that. Then you determine that for that specific item that you are producing, what is the final total cost of everything that the organization is faced. And you're saying, for example, if you're Tiger Brands, you can say that for us to produce this year, our total cost was 3 million rand. But that is not useful for you as a manager to know that the total cost was 3 million rand for you to produce all of the laptops that you produced. But you want to know for each specific item, for each specific can of baked beans, for each specific laptop, for each specific 2 kg bag of rice, what was the unit cost? Then once you've done that, then you can now go into pricing. What is the price that you can then put? Because you want your price to be above the cost. And then you can also decide along the way, how do you manage the cost of the organization so that they do not increase unnecessarily and thereby affecting the cost of your organization, right? So that's an introduction to management accounting, or that's an introduction to cost and management accounting. So now the next thing that we are going to talk about is now cost classification. That's the next unit in your study guide. That's cost classification. So when you're talking about cost classification, as I highlighted, okay, let's go to management accounting there. Right. What we want to know is what is a cost to the organization and how do we separate different types of costs that are faced in an organization. Now, for the guys that are doing management accounting, you only do 3 types of cost classifications, which is you classify costs by behavior, you classify costs by their nature, you classify costs by their function. Those are the 3 cost classifications that you do. But for the other guys, you go even a step further, right? You also classify costs by and etc. You go a step further. We're gonna talk about that a little bit later on, right? But for now, what are we saying a cost is in an organization, right? It's self-explanatory. I don't think I need to go deeper than that, right? We are just saying that for you to produce whatever it is that you are producing, there is a certain economic resource that you lost for you to produce what you produced. If you are Coca-Cola, who is producing drinks, who is producing Fanta, who is producing, Sprite and etc., you had to use sugar, you had to use water, you had to use electricity. All of these things, you had to pay for them. None of them were free. So those are the costs that are attached to the organization. Those are the costs that are faced by an organization on a what? On a day-to-day what? On a day-to-day basis. So that's what we want to discuss about now. That's what we want to go a little bit deeper into right now. So just give me a second here. Let me just fix my slides and then we can talk a little bit more. All right, so costs. All right, so we talked about that. So let's go into some key definitions, right? So we defined what cost is, right? We highlighted is any expenditure that you incur for you to be able to produce something within an organization. That is what you can call a cost, right? And then under costs themselves, there are different verbosity or terminology that we will constantly be using as we go throughout the semester, right? So it depends with the depth of information that you want to know, but it is necessary for you to understand some of these things because they will help you, specifically if you are employed or if you are working as a manager, to understand what we're talking about. So when we say something is a cost object, right? When we say something is a cost object, we are saying that you want to, how can I put this? You want to attribute a cost, right? And say that this is a cost, right? In the organization. You cannot just say our costs were 1 million rand. That is vague, does not make any sense. But you want to know what were the components. Yeah, that's the correct word. What were the components of the cost of the organization? And then if I tell you, oh, part of the cost that we had is we had security costs. Part of the cost that we had is we had rental costs. Part of the cost that we had is we had material costs, labor costs. So that becomes what we mean a cost object, right? That becomes a cost object that is faced by an organization, right? Then we have what we call a cost center, right? A cost center, we are saying that this is now a location within the organization, right? Location in terms of a physical location or location in terms of an area we identify, even just in our mind, a location within an organization where we can attribute cost objects to, right? So for example, when I said security expenses, we can have security expenses for the Coca-Cola plant in Eswatini, which means the Coca-Cola plant in Eswatini is the cost center, right? We can have security costs for the head office for Coca-Cola that is in Joburg, which means the head office for Coca-Cola that is in Joburg becomes a cost center, right? Or if we say our stationary costs as a cost object, right? And I say the stationary cost of the marketing department, which means the marketing department becomes a cost center. If I say the stationary cost for the finance department, which means the finance department becomes a specific cost center within that organization. So anyway, where you can trace the costs that are being faced within an organization can be regarded to as a cost center, right? Then the cost unit now is we are now talking about their specific thing, right? Their specific item where the cost is attributable to. So for example, if you are producing Fanta, one bottle of Fanta, it becomes the cost unit. If you are producing laptops, one laptop that you have produced becomes the cost unit. If you are a bank and you are serving customers, a customer in himself can be a cost unit to you as an organization. So that's a cost unit that you can face as an organization. Now, so I'm just going through key terms that you need to understand so that when I start talking, you understand what I'm talking about. So when we say something is a relevant cost, when we're talking about management accounting or on cost accounting, when we say something is a relevant cost, we are saying this cost has to be included within our decision making. It affects the decisions that we are going to make as an organization, right? So for example, if I want to make a decision, should I build a house in Durban or should I build a house in Cape Town, right? The transportation costs of the builders going to Durban and going to Cape Town is a relevant cost to me as an organization, right? Because it affects what I'm doing at the moment. But the cost for the fees of my child, right, does not affect the building of whether I'm building in Durban or whatnot, because that's my own personal cost that have nothing to do with the project that I'm implementing at the end of the day. So a relevant cost is a future cost that is affected by the decisions that we are making at any specific point in time. Then what are sunk costs? If you hear a person saying, this is a sunk cost. A sunk cost is a cost that has happened in the past that will not change the future. So, for example, I want to make the same decision. I want to build either in Cape Town or I want to build in Durban, right? So, right now, I might consult, right, an architect or an engineer and say, can you give me the estimated costs of these projects? Remember, for me to do that, I have to pay that engineer or that architect for him to give me the estimated costs. Guess what? Whether I build in Durban or whether I build in Cape Town, I've already spent money to that engineer for him to give me the estimates, or that quantity surveyor for him to give me the estimate. So that is a sunk cost. It does not affect the decision that I'm going to make because it's a cost related, it's irrelevant, yes, to what I'm doing, but it's already sunk. It does not affect the future decisions that I'm going to make at the end of the day, because I've already spent the money with regards to what to that specific decision, right? Then opportunity cost, you know this from economics in our year one, right? The value of the alternative forgone whenever you are making a choice. Incremental cost is the cost that is going to increase when we make a specific decision, right? If I choose that I want to use a road to transport my goods, right? There's going to be incremental costs in the form of the monies that I have to pay the drivers, in the form of the toll gates and all of those things that are going to increase the cost of me transporting things. But if I say I want to use air, I'm just going to pay one fee and I'm not going to pay anything else. So in incremental cost is when costs are adding up, when they constantly increase whenever you make a decision. So whatever decision you're making, any additional cost that occur after you make that decision or when you make that decision become your incremental cost or incremental. We're going to also talk about incremental revenues, right? So now I'm where I want us to talk about, right, which is the important part. I'm going to do this for the next maybe 20 minutes and then we are done for the day, right? So classifying costs, right? So like I said, we're going to first talk about the three major classification of costs, right? Which is classifying costs as direct versus indirect costs, classifying costs as fixed versus variable costs, classifying costs as manufacturing versus non-manufacturing costs. And then I'm going to talk about the other ones later on at the end, right? So there are different ways of classifying the costs of an organization, right? If you classify the cost of an organization, where do I want to start? Direct versus indirect, right? So this is directly from your study guide. I have separate notes on it, but this is directly from your study guide, right? So we can classify costs based on their nature, right? We can classify costs based on their nature, where we've got our direct costs and indirect costs, right? So when we say something is a direct cost, what are we saying in an organization? We are saying that whatever it is directly involved in the manufacturing process of the thing that we want to manufacture. So for example, if I am manufacturing a drink from Coca-Cola, if I am manufacturing a drink from Coca-Cola, right, my direct cost is the water that is going to be used in the drink, is the sugar that is going to be used in the drink, is the factory worker that is going to actually manufacture the drink in the factory, right? So we have what we call the direct materials and we have what we call the direct labor whenever we are dealing with direct costs, right? So the stuff that you I don't know how to put it across, but something that significantly impacts the product that you are manufacturing, right? That can physically be seen that it contributed towards the manufacture of that specific product, right? Then when we are saying a cost is an indirect cost, we are saying that we cannot really see that specific cost within the product. But however, it was important. It was important, but we cannot really see the impact on it. So for example, if you are looking at the rental, right? The cost for the factory itself, the rental, right? So within the Coca-Cola manufacturing plant, you have got Fanta, you have got Coke, you have got Sprite that is being produced there. If you go to the accountant will actually tell you that it cost us, right, 3 million rand for us to be able to produce this number of bottles of Coca-Cola. It cost us 30 tons of sugar. It cost us 3 hours of labor per each bottle of Coca-Cola, and etc. You can directly tie in the cost to the bottle of the Coca-Cola. But if you were to tell him how much rental did you pay for the production of one bottle of Coca-Cola, that becomes impossible. Because within the same factory, where he was producing the bottles of Coca-Cola, he was also producing some bottles of Fanta. He was also producing some bottles of Minute Maid. He was also producing some bottles of Sprite. So the rental becomes an indirect cost in this specific situation because the material that is going in, the labor that is going in, the costs that are going in cannot be directly attributable to that specific product. Or for example, let's say the salary of the CEO. The salary of the CEO is an indirect cost because the CEO is in charge of the whole organization. You cannot say that the CEO spent 2 hours producing one bottle of Coca-Cola and then another 2 hours producing one bottle of Fanta. You can never be able to do that. So the salary of the CEO becomes an indirect cost to the organization because you cannot attribute it directly to a specific cost center or directly to a specific product at the end of the day. So that's the difference between a direct cost and an indirect cost, is how you are able to separate between how that specific thing has been produced in terms of the cost or not. If you are not able to, then it's an indirect cost. But if you're able to highlight, okay, for this thing, we needed 1, 2, 3, 4 things, then that becomes a direct cost to the what? To the organization. So that's one way of separating products, direct costs and indirect costs. So in front of me here, I've got a list of things that you can see over here. I've got things that Coca-Cola, in terms of its expenses that they face when they are producing, right, one bottle of Fanta. So I highlighted all of the costs here, and I want you guys to attempt and to see which item falls under direct cost and which item falls under indirect cost. Right, which item falls under direct cost and which item falls under indirect cost. So I will call it out and you guys can, maybe you can put it in the chat, or if you don't have any background noise, you can unmute yourself and you can highlight what you think. So for example, if we say the carbonated syrup that is used in the manufacturing of Fanta, is that a direct or an indirect cost? What do you guys think?
Direct.
Direct cost.
Direct cost.
That's very correct. What about the factory cleaner, the person who is cleaning in the factory? Do you think that's a direct cost or an
Indirect?
Direct.
Yes, that's correct. That's an indirect cost. So the carbonated syrup is a direct cost, but the factory cleaner is an indirect cost, right? What about the, let's see, what can be confusing here so that we help each other. Let's see. What do I have here? What about the insurance of the offices at Coca-Cola, of the factory? Is that direct?
Indirect.
Indirect.
That's fine. I think it's straightforward.
Factory manager would be what?
Sorry?
Factory manager, would he be part of would he also be indirect?
Indirect.
It would be indirect.
Yes, ma'am.
It would be an indirect cost in this particular instance because they are producing many other different things in the factory. You can see in my examples, I said they are producing Fanta, they're also producing purified water, they're producing all of these different things. So that's an indirect cost because it's managing all of the factory, including the Fanta, including the water, and all of those different things. All right, so you can go through the rest of the examples there. That's fine. All right, so we have talked about direct versus indirect. Now we want to talk about fixed versus variable. We want to talk about fixed cost versus variable cost. Right. So when we say a cost, we are talking about behavior here. The behavior of the cost, how the cost behaves. So when we are saying a cost is fixed, we are saying that irrespective of how much you manufacture, the cost is going to be the same. Just think of the rent of the same Coca-Cola plant, the rent that they are paying. If they were told that the rental for this plant in Eswatini is 20,000 rand a month, whether they produce 15,000 bottles of Coca-Cola or they produce 40,000 bottles of Coca-Cola, as long as they are producing it within that factory, they are paying the 20,000 rand a month. So that is a fixed cost, right? It does not change with the output. But I want you to be very careful there. There is a word that we're going to introduce later on, which is called mixed costs. Mixed costs, we're saying there are costs that have got an aspect that is fixed and an aspect that is variable. So, for example, you might say, James, what if we produce 1 million bottles of Coca-Cola? What that means is you have to expand the factory for you to be able to do that. You cannot do that in the same factory. So that is going to introduce a certain amount of flexibility later on. But those are fixed costs, right? Then variable costs, they change with output. So the amount of sugar that you are using at the Coca-Cola plant, if you produce 5,000 bottles of Coca-Cola, you're going to use 2 tons of sugar. If you produce 15,000 bottles of Coca-Cola, you're probably going to use 20 tons of sugar. If you produce 30,000 bottles of Coca-Cola, you're going to use maybe 100 tons of sugar. So as you increase your output, you're going to see the cost of the plant increasing. So that is a variable cost within an organization. Right? So that's the difference between a variable cost and fixed costs, right? So again, we've got a couple of examples there that can either be variable or that can be fixed. So what are your thoughts on this one? Rates and taxes related to the factory plant. Do you think that's a fixed cost or a variable cost?
It's a variable.
Fixed cost.
Fixed cost.
Fixed cost.
It's a fixed cost, correct.
Fixed.
Rates and taxes are a fixed cost. I know some people might start thinking about VAT and all of those sort of things, but that's different from what we are talking about. But normal rates and taxes related to the factory are fixed costs. They do not change with the output. It's fixed by the city council according to the square mileage of the plant. Right. What about advertising? Do you think advertising is a fixed cost or a variable cost?
Variable. Variable cost.
Okay. So advertising is a very interesting cost now. Normally, it's actually fixed. Advertising is normally actually fixed. But however, it's one of those costs that can be semi-fixed. Why? Because when you are doing your advertising, you actually determine your advertising at the beginning of the year and say, this is our advertising budget for Coca-Cola, regardless of the amount that you're actually going to produce. But what usually happens then is there might be a variable component to it. For example, if your advertising is related to distribution, so the more you distribute, the more you might end up having to advertise. Right. So, for example, if you are saying the adverts, you want to put billboards on the trucks. Right. So, if you buy more trucks, you might end up having to increase the level of advertising, which means it becomes semi-variable, but it's actually more of a fixed cost than it is a variable cost. The one that is actually variable is what we call commission on sales. That one is a variable cost because as you increase the sales, you will also pay more to your salespeople that are selling on a commission basis. So you really have to dig into some of these things for you to be able to determine whether it is fixed or whether it is variable. Then there's something that is interesting when we're talking about fixed versus variable. That is salaries or wages. Right. So the one thing that you have to understand when we're talking about these things is the assumptions that we make. The assumption that is usually made is that when someone is working at factory level or in the factory floor, they are paid per hour. That's the assumption. They are paid per hour weight, which means that if we do not produce anything at the factory, they do not work there. If we produce more at the factory, we pay them more because they're being paid per hour. That's the assumption. But however, there are some organizations which have fixed salaries instead of hourly salaries. Their employees, if the employee is paid 20,000 a month, they're paid 20,000 a month, right? Regardless of whether they manufacture anything at the factory or not, they are being paid 20,000 a month. So that actually becomes a fixed cost. Although the person might be working in the factory, directly manufacturing the Coca-Cola, but because he is not being paid based on what he has produced, but being paid on a monthly basis, that becomes a fixed cost, which introduces us to the concept of what are called period costs. We are going to talk about them shortly, but which are called period costs and all of those sort of things. We are going to talk about them shortly. But that's something that you also need to keep in mind. But for examination purposes, whenever we talk about wages of factory workers, they are variable. When we talk about the salaries of the managers, they are fixed. Just for examination purposes, unless otherwise stated. The salaries of the managers are fixed. The salaries or the wages of the factory workers are variable. Just take note of that. Salaries of managers, salaries of people in the administrative staff, they are fixed, whereas those for the people that are in the wages, they are what? They are variable. Same as sales commission for the salespeople, it is also usually variable. That's something that you need to understand, right? Then the last thing is manufacturing versus non-manufacturing costs. Now, there are costs which are related to the manufacturing of a product. Then there are costs that are completely not related to the manufacturing of a product. So for example, using my Coca-Cola example, the sugar is part of a manufacturing cost. The salary of the employee working in the factory is part of the manufacturing cost. The salary of the factory manager who manages both Fanta and Coca-Cola and water and whatnot is a manufacturing cost. The rental to the factory that manufactures the Coca-Cola is a manufacturing cost because it is directly related to the manufacturing, right? But non-manufacturing costs, we are now talking about administrative costs. So for example, if I now talk about sales and advertising costs, those become non-manufacturing costs. Or if I talk about the salaries of the CEOs and the finance managers and the marketing managers, all of those people that are not directly related to the actual manufacturing that is taking place in the organizations, those become non-manufacturing costs of the organization. So that's something that you also need to take into account. On this one, the usual difficult ones is depreciation and insurance. So you have to read the language of what the lecturer is saying. If the lecturer says insurance of the factory, it is manufacturing because the factory is related to manufacturing. But if he says insurance of the buildings of the company, that is the company itself. It has nothing to do with the actual manufacturing that is happening. That becomes an administrative cost. If he says depreciation of the equipment in the plant or in the factory, that becomes a manufacturing cost. But if he says depreciation of the delivery vehicles, that is no longer related to manufacturing. That is now a distribution or an administrative expense that the organization is facing at the end of the day. So you have to be a little bit careful when you are dealing with those specific things. All right. So for the guys that are doing management accounting, this is actually where we end in terms of our unit number 2. But like I said, remember, I combined you guys. There are still two more classifications that are very important for you to know, just for your own personal knowledge, and also for the guys that are doing cost accounting, for them to also know. So those are the ones that I'm going to look at right now. So just give me a second. Cost classification. All right. Just want to manufacturing, marketing, administrative. We talked about this. Okay, so you can also classify costs according to timing, right? You can classify costs according to timing. So this is what I was talking about when I was highlighting issues of period costs. You can classify your costs according to the timing. So if you are classifying costs according to timing, they can either be period costs or product costs. They can either be period costs or product costs. So something just to make sure that you don't get confused. Remember, we said direct costs versus indirect costs. We said fixed costs versus variable costs. We said manufacturing costs versus non-manufacturing costs. These are not 6 different things. Please don't confuse yourself. These are not 6 different things. They could all be the same thing that you're talking about. Right? It's just we are saying that they are on each and every time. We're saying that we can separate into 2. It can either be fixed or variable. But something that is variable can also be direct. Right? Something that is variable can also be direct. Something that is variable can also be indirect. I want you to understand that so that you don't confuse yourself. These are not 6 different things. These are different ways to classify cost that we are talking about. A cost can either be direct or indirect. A cost can either be variable or fixed. A cost can either be manufacturing or non-manufacturing. If I say a cost is manufacturing, it does not mean it is not direct. It does not mean that it is not variable or something like that. It can still go and qualify under something else. But I'm just looking at that specific classification of a cost. All right, clear that up. So I said timing costs can either be period costs or product costs. So if we are saying something is a period cost, we are saying when we are classifying the cost, it is related to a specific accounting period. For example, the rental expenses of the organization for the year ended something, something, something. Right? The rental expenses for the year ended something, something, something. But when we are saying something is a product cost, we're saying that within that year ended something, something, we manufactured 23,000 items that costed us this amount in terms of the materials. Right? So you can either talk about costs in terms of whether they are period costs or whether they are product costs. Product costs relate directly to the manufacturing of the product, whereas period costs relate to a time element. These costs are related to this specific period. So that's one way of looking at costs. Right. Then there's another way. Just give me a second that I want to talk about before we mixed costs, we talked about it. Variable costs, fixed costs, we talked about it. All right, that's fine. So I think I'm going to end it here for now. Right. So in my next lecture, for the guys that are doing management accounting, we are going to be looking at materials. We are going to be looking at the economic order quantity, methods of valuation, just-in-time inventory system, FIFO, AVCO, LIFO, and all of those sort of things. Then for the guys that are doing cost accounting and cost and management accounting, we are going to be looking at the issues of prime costs versus conversion costs. We are also going to be looking at, what's the other one? There's another one that we need to look at. What is it? Prime cost versus conversion costs, and where is it? All right, I can't find it anymore. But anyway, it's fine. We're going to look at prime cost versus conversion costs, and then we're also going to be looking at the issues of actual calculations of how, if we're given a lump sum in terms of the cost, like if I say the cost is 30,000, how can I separate the costs between variable costs and fixed costs? How can I separate the costs between prime costs and conversion costs? And then we're going to do a lot of examples. Because for you guys that are doing cost and management accounting, there are questions where you need to be able to separate costs. separate between prime costs, separate between conversion costs, separate between variable costs, separate between fixed costs, and etc., like actual calculations. So there are methods that we're going to go through to do that. But for the guys that are doing management accounting, the good thing, what we have done is enough. Just knowing, you don't need to do any calculations. You just need to know. So when we meet next time, we go to unit number 3. But for the guys that are doing cost and management accounting, when we meet next time, we are still on unit number 2, where we go deeper into actual calculations. So ladies and gentlemen, this was our introduction in terms of what cost accounting, or what costs are, and what management accounting is all about. So when we meet next time, it will only be for those guys that are interested in the classes. I will no longer be posting on the major platforms. I will only be posting to the guys that have indicated that they're interested in the classes. So make sure that you join through. I think we're going to have our next meeting next week. I'll always post in advance whenever I know that there is a meeting that we're going to be having. And remember, like I said, some of the meetings might not be online like what we've done. Some of them will just be recordings that we'll be sending through for a specific unit. Because of just trying to manage our time. So some of them will be recordings, some of them will meet in person like this. If there's anything that is difficult, always feel free, give me a call. James, you've sent us some recordings for this, but there's something that we don't understand. Can we please meet for 15, 10 minutes just to discuss that specific thing? Because I know that accounting can be a little bit vexing. So that's why I said that for management accounting and for advanced business statistics, they are going to be a lot more interaction than all the other modules. Most of the other modules will send a lot of videos, but for management accounting and for advanced business statistics, we are going to make sure that we do a bit of interaction so that we don't lose you guys in terms of understanding the content of the module. All right. So if there's anything that you need, feel free to text me, feel free to give me a call. As usual, I'm open from 8 a.m. up until 5 o'clock during the day. If you reach out to me in the evening, sometimes I may not be available, but feel free to text. If it's a text message, it's fine. It's just that calls sometimes in the evening, I might be sleeping, but feel free to text, and then I will respond to you. Right. Then make sure you make your payments by the end of February, because I think at the end of February, we're starting with the assignments, remember? We're starting with the assignments at the end of February. So make sure that you've made your payments by end of February so that you do not lose out on the solutions to the assignments, on the solutions to the KCQs that we'll be sharing with you guys within the classes. I hope this was beneficial to you. We shall see each other next time.
Thank you, James.
Thank you, James.
Thanks, James.
Thank you, James.
James.
Thank you, James.
Thank you, James. Good night.
Thank you, James.